What's going on, ladies and gentlemen? This is your host, Danny from Markets Protocol. In this video, we're going to talk about the differences between a pullback and a reversal, as requested from you guys specifically in last live stream. So let's get on with it. All right. So, pullback and reversals, a key concept in trading. Okay. You need to know the differences first. And once you know the differences, I'm going to teach you how to potentially trade pullbacks and reversals too. Okay. Now, first of all, let's talk about a pullback over here. Okay. What is a pullback? Now, for example, let's talk about a bearish trend here. Bearish market trend. Okay. In a bearish market trend, what does price do? First of all, price makes lower highs and lower lows. Okay. We all know that. So instead of writing it down, I'm just going to draw examples for you just to make this video nice and short and concise. Okay. So in a bearish market trend, what does price do? In terms of candlesticks, price makes lower highs. Okay, so let's say this is the first candle forming at resistance. Next candle should respect the high of the previous, breaks the low of the previous, continues going bearish. Next candle does the same thing, respects the high of the previous, creates a lower high, breaks the low of the previous, and continues going bearish. Perfect sign of an downtrend. Okay, so this would be example of a market trend that is trending towards the downside. What happens when price does a pullback in a downtrend? So let's do a bit of example here. Let's remove this and this. Okay, so let's say in terms of line chart, price is making lower highs, okay, lower lows. So every time price is breaking the previous low, it's creating a new one. Every time price is breaking the previous low, it's creating a new one. Every time it breaks the next low, it creates a new one. Okay, now pullback. Pullback happens after a new low is formed every time in a bearish trend. Okay, so the sign of a pullback is right here. Okay, the short movement towards the upside is a pullback right here. This is a pullback, pullback right here. Okay, so in terms of candlesticks, what it will look like is like this: candlesticks bearish, making lower highs. Okay, lower lows, and then you see a bit of exhaustion in price, and then you see potential support forming. Every time price is creating support in a downtrend, it is creating a pullback. Okay, so pullback should always be a lower trend. Okay, so what you can expect over here is a bit of a pullback. Price creates resistance again, matches up with the overall trend, and price once again continues down with a lot of momentum. So you see these two bullish candles here. This happens 90% of the time in a pullback. In a pullback, price creates a lower high to break the low of the previous and continues further bearish to form a new low. This is a perfect example of a pullback, not a reversal. We're going to talk about the differences and where you can basically profitably trade between the two. Okay. Now, in some cases, you could trade the pullback. Okay. In 90% of the cases, I recommend not trading the pullback. Okay. The simple reason for that is following the trend. Okay. The trend will always be stronger than a pullback. Just remember that. Pullback will always be weaker. Okay, let's say the bearish trend is happening, the trend towards the downside will always be stronger compared to the pullback. Okay, pullback will be short-lived, very, very short-lived. Then you have the trend. Okay, so trend will always be stronger. This is what you need to remember. Okay, so 90% of the time you will trade according to the trend. But can you trade the pullbacks? You could trade the pullbacks, but it does involve a lot of experience. There's few technicalities involved in order to trade the pullback successfully. First of all, I'm going to mention to you is a supply and demand zones. Okay. Now, in terms of a bearish trend, what we need to see is, do we have an upcoming demand zones? Okay. Supply, we need to worry about in an uptrend, but demand zones, we need to worry about it in a bearish trend. So let's say, hypothetically speaking, price is trending bearish, forming resistance first. Okay. Bearish candle closed, forming resistance after an uptrend, and then price decides to make lower highs and lower lows, lower highs and lower lows. Comes up to a significant area. Okay. For example, let's say in the past, or let's say brand new demand zone formed, right? Price closes with a lot of momentum, bullish here, forms support. Okay. Price continues towards the upside. Now, what we know what happened here is a support farming first of all, and at the same time a demand area, demand for price to go up. Whenever there is demand for price, this is where price goes up. Okay. Now, in terms of pullbacks, if price has reached an area where we had demand before, you could definitely trade it. So what this means in terms of structure, let's say the trend is dominant bearish. Okay, price is making lower highs and lower lows. This was the recent pullback up. Price comes up to previous resistance. Okay, closes bearish here. Okay, next candle breaks the low the previous. We start to continue towards the downside. Okay, hypothetically speaking, this happens all the time. Okay, now what we know, hypothetically speaking, let's just say this is trading on gold. This is 1800 price level. We all know 1800 is a very strong, psychological level. So price just taps into this demand area, this previously support area. Okay, right over here. What do you expect? There's two options for price at this point. We do this every single day. There's two options for price. In a bearish trend, price needs to break the previous zone or the previous swing low to create a new swing low. Okay, this is the idea in order for price to continue that bearish trend. However, looking at the previous demand area right over here, if we do not break this demand area, we end up creating a support above this demand area coming into the future. This indicates a move towards the upside. Now, since the trend is not completely switched towards the upside, you could expect a pullback. If a support is formed at a previous demand area, again, we can expect price to pull back from here. Now, is the pullback tradable? Absolutely. Absolutely. If this is a key rejection in the past, price is coming back to it again, creating support here. Next candle breaks the high of the previous. What is the probability we're going to continue back up to potentially retest the previous resistance or the previous highs here? Now, this is going to be a pullback towards the upside until we break the high of the previous. 90% of the cases, when price is trending bearish, it should not break the previous swing high. So you can expect this pullback to continue somewhere till resistance, but not break the previous highs. So in that case, is it tradable though? Absolutely. But once again, it requires experience in the market. If you're not comfortable taking it, if you are not, I would say if you don't have any experience trading the pullbacks, I suggest you not to take those. Okay. But if in the future, let's say you want to try it out, you maybe use a smaller risk just to see if it works. What you can do is once a support is formed, you see candles breaking the high of the previous candles, making, you see, so I will tell you right here, we are making lower lows and lower highs, lower lows and lower highs. Okay, once we create support right here, price made a high. Okay, next candle should have a higher low. Once it creates a higher low, breaks the high of the previous, this is a confirmation that a pullback is going to go towards the upside. For example, this candle, hypothetically speaking. So this candle could continue towards the resistance as a retest, and potentially this is going to be your pullback. Okay, now you can wait for pullbacks to happen, price to create resistance here again to continue going bearish and trade along with the trend, or you can counter trade, which is right here in the process of pullback towards the upside. Okay, now this was based on candlestick formations. If you were to draw, let's say for example, line chart examples, I can do that for you as well. So let's, erase all of this and show you a line chart example. And once we are done with the bullish and bearish examples, I'm going to take you to gold over here, recent price action that happened last week, and show you live examples of that as well. So once again, marking up the bearish trend because we're talking about bearish examples here. Once again, highlighting bearish trend. Now, once again, in a bearish trend, price does what? Makes lower highs and lower lows, lower highs and lower lows. Okay, let me just do this for you. So red will be bearish, blue will be a pullback. Okay, much better and much clearer. Trend bearish, then you have a pullback. Once again, trend is going bearish, and you have, I'm pretty sure you guys can say it now, a pullback. And the next, again, a move towards the trend. Perfect. So every time price is creating support, if it breaks it, we continue towards the upside, pullback. If price creates support, we can expect a pullback. Now, every time price is breaking a key support, it's coming down to make a new swing low. And if we create support there, it's going back to retest that previously broken support, turning into resistance to continue back down. Okay. So whenever pullbacks happen, let's say I'm going to show you this line chart example here, and I'm going to show you candlestick example here side by side, so it makes more sense. Okay, so let's say, you know, bearish trend, price is coming down, forms a low here. Okay, then you have a bit of a pullback, right? As we talked about it, a little bit of a pullback right here. Until then, you see a bearish candle forming a beautiful resistance here to continue the trend towards the downside. Okay, now hypothetically speaking, this is not live price action, hypothetical examples, but don't you have a support here? For example, right here, you have a support, right? So what happened here? Price broke that support and closed below that support. This is a confirmation for price to continue towards the downside once the next candle breaks the low of the previous. The trend continues. Once the trend continues, you have to wait for a low to be formed for a pullback. How does the low form? A market structure low forms when you see a support forming. The next support forms right here. We have confirmed a new structure low. This was the previous structure low. This is the new structure low. For example, this one. Okay. Once a low is formed, when a candle creates support. Now, before we go into more detail, for example, let's say this is 15-minute time frame or pretty much a 30-minute time frame, because we do use these time frames on day-to-day trading. Okay. Perfect. Now, support is formed. That means a new structure low is confirmed. Okay. Once we have formed a new structure low, if the next candle breaks the high of the previous, creates a higher low, breaks the high of the previous, and is potentially headed to make a new high, can you trade that? Of course you can trade that. Okay. All you have to see is that looking left, do we have a clean range, and is it big enough to trade? Let's say looking left, you have clean candles. Measuring the range, let's say you have about, you know, pretty much a 30 pip range towards the upside to trade this pullback. And if getting 10 to 12 pips is your target to trade within this 30 pip range, you can definitely trade that. So these are technicalities I'm talking about. Checking the size of the ranges, looking at the traffic in the ranges too. Do we have a clean imbalance? Do we have a clean structure which price can mirror in the future to continue going back up in this pullback? If those are all check marks, you can definitely trade this pullback. Okay. Now, price breaks the high of the previous. This is going to potentially, you know, indicate your entry. Stop loss placements, if you like aggressive stop loss, you can keep it on the current candle low once it breaks the high of the previous. If this is something too aggressive to you, what you can potentially do here is keep the stop loss instead on the previous candle low and expecting the next candle to break the high of the previous and continue on further bullish up to where? This is what we talked about, and this is the simple reason why I drew candles here. You can expect the pullback to potentially end at the previous support right here. Ladies and gentlemen, this was a support previously. So we have created new lows, form new support right here to retest the previously broken area. Price comes up to up here again. You can expect price to stop there. So in that case, this will be target for buys, and you can close your positions, because if we see a resistance forming in a bearish trend, price will continue towards the downside with much more momentum than we had for this pullback. Okay, so hopefully this makes sense to you. Now, these are pullbacks. What is difference between a pullback and a reversal? Okay, a lot of people mistake pullback for reversal. A pullback is much different than a reversal. Reversal simply, common sense in simple words. Reversal means complete change in a trend. Let's say price was trending bearish previously. It changes the trend towards the upside completely. Okay, no sign of sellers. Price trends bullish, breaks previous resistances, turns it into support, and continues its momentum towards the upside. So reversal is much different than a pullback. All the examples that I talked about right now, these are based on pullback. There is no sign of a reversal here. But now I'm going to talk about the reversals. So this example was based on a bearish trend, and it's going to be simple, vice versa for a bullish trend here as well. So just before we talk about reversals here, let me just draw a little example for you in a bullish trend too, just in case. Now I can say vice versa, so you can do your own thinking, but might as well. There could be a new trader watching this, so it could help anybody out. So might as well do a little bit of a more effort for you here. All right, perfect. Now we're going to talk about an example of a pullback in a bullish trend. So we're still talking about pullback here. One more example in a bullish trend, ladies and gentlemen. So let's do one more example before we head towards a reversal topic here, which is also very important to talk about. Perfect. So bullish pullback. Okay, so pullback in a bullish trend. This is what we're going to talk about right now before we talk about reversals. Perfect. So what happens in a bullish trend? In a bullish trend, we all know price makes, in terms of candlesticks, higher highs, higher lows, higher highs, higher lows, right? Once price reaches a key area, historically taps into it, then what we'd see is potential resistance, or it forms a new resistance. Forms resistance, there's a bit of a pullback towards the downside until we lose momentum towards the downside, okay? Create support, okay? Create support here to continue further towards the upside with a lot of momentum, because the dominant trend in the market is bullish. Okay, now once again, a lot of people will think what time frames this should be at. Once again, this could be lower time frames like the 15-minute time frame or 30-minute time frame. This could also be being looked at on a higher time frame like the 4-hour time frame or a daily time frame. So it depends on which time frames you trade. If you scalp, you probably use 15 and 30-minute. If you day trade or swing trade longer term positions, then 4-hour and daily time frame. So regardless of time frames, it basically is the same example. So once again, in an uptrend, price makes lower highs and higher highs and higher lows. There is a pullback until price creates support. There's no guarantee of a continuation of that trend. Okay, once price forms support, you can expect price to retest the previous highs. Once the retest is done, we break above the previous high, you can expect price to further continue going bullish here. Okay, so once again, the pullback, where and how you would trade a pullback if you were to trade it. Once again, I don't recommend trading against the trend. It is 100% tradable, but for the long-term profitability, I would not suggest you trading the pullbacks. I would much more suggest you to trade the trend. It will definitely take you more time to wait in the market to capture a trade within the trend, but it will be easier for you to trade minor pullbacks. But in terms of profitability, long-term profitability, you need to trade based on the market trend at that time. Okay, so just keep that in mind. Once again, in an uptrend, price is making higher highs, higher lows, higher highs, higher lows. It's breaking the previous high to form a new high. Once it forms a new high, it goes back down to retest the previously broken zone or the previously broken high right there. Once it does a retest, then the momentum continues towards the upside. Okay, now let's just say we had a resistance previously, price was coming up. Okay, higher highs and higher lows. We form a resistance when a candle closes bearish here. Okay, we go down towards the downside. Now, very likely pullback you would not see with big candles, small candles right in there. Okay, now if you see support forming right here, you can expect price to move up once again, coming back up to the area here. Okay, now let's just say price does not break above this high right here, fails to pretty much go above it. So let's just say this is resistance right here, candle does not close above resistance. What can you expect? Maybe a pullback, then a continuation towards the upside. Okay, now let's say a candle closes bearish right here, forms resistance. Also, you need to make sure that's not a retest candle, because if this is a retest candle, then it has broken the high of the previous. It has also a higher low. That means the next candle can still go bullish. This one was a retest candle, but that's a different concept. Okay, so let's say price comes back down right here into this previously support right here. Now this could be a potential demand where you can buy it for price to continue towards the upside. If you buy it right here at this demand in an uptrend, that's a good trade because you can expect price to move with a lot of momentum. However, if this is a resistance previously, now remember, we're talking about bullish trend here. Trend is bullish. When we created resistance, we went down. Price came back up to this resistance where we had a good sell-off towards the downside, just a pullback, not a major sell-off or a reversal. History ends up repeating itself in the future. We created resistance at the same place we created resistance. If the next candle respects the high of the previous, does not break it, forms a lower high, breaks the low of the previous, this is a pullback towards the downside. Pullback could be traded here. Once again, it's going to be risky, but it could be traded here. Stop loss will be on the current candle high, expecting this candle to continue bearish till support once we have broken the low of the previous. And since you are looking into trading a pullback at that time, what you will do, you will have a very short take profit right here at the previous support. Because looking left, the trend was bullish previously, created resistance to come back down here, create support. Once you trade the pullback, the previous support will be your targets right here. So once again, it will be short-lived. It will be short-lived. And once again, since the trend is bullish, if you do not trade the pullback, instead you trade basically the trend, you simply wait for a support to form once again, where price previously created support, aka your demand area, and once again, price could continue towards the upside once again with a lot of momentum. So hopefully this concept is clear to you now. The pullbacks, okay? Pullbacks are moves against the trend. If price is making lower highs and lower lows in a strong bearish trend, any attempt to go the other direction, which is pull back towards the upside to continue bearish, that's pretty much a pullback right there. Any bullish move in a bearish trend is a pullback. Any bearish move in an uptrend is a pullback. Now, just before we go into reversals, for reversals, actually, we can talk about reversals first before I show you the live examples. Live examples I can show you based on pullback and reversals at the same time. Now, reversals, key concept, and very interesting concept too. Okay, now, for example, let's talk about a bullish trend here. Price is making higher highs, higher lows, okay, going towards the upside. And then we have, let's say, for example, a resistance forming. Resistance formed, what can you expect? A pullback. Once again, pullback towards the downside. Once again, it's going to be short-lived because it is against the trend. Now, why do pullbacks happen? Pullbacks happen when price reaches a key area. Now, institutions, central banks will be looking forward to closing their active orders. They close their orders. Okay, people taking profits. What happens? Causes a little bit of a pullback, but that's not a reversal, right? Remember that. That is not a reversal. Once again, in an uptrend, price creates support. What happens? We continue, ladies and gentlemen, towards the upside. Once again, we continue towards the upside. Now, if there is a failure to break above this resistance, we form resistance here again. What can you expect? A pullback towards the downside. Once again, because previously price did the same, didn't it? Right here. Once we formed resistance, we went down. So history could repeat itself. Now, one thing you need to watch here, which makes a big difference between a pullback and a reversal, is the previous swing. I would say previous swing low here, which is a higher low. Okay. Once again, drawing the line charts on the left hand side to show you examples here. So every time price creates a higher low, the next higher low should be higher, right? That's why we call these higher highs and higher lows. The previous low should not be broken to make a new high. Okay, so here we create a high. Okay, we pull back here, not to break the low of the previous, and then we continue back up. We pull back down, not to break the low of the previous, and then we continue back up. So if this is the previous swing low, which is a higher low, if price breaks it, closes below it, this is a potential reversal. Now, there are a few technicalities which you need to understand. If these two tops, these are very famous double tops, which happen all the time on multiple tradable instruments. It is a very highly recognized reversal pattern in trading. Okay, most of you should know this. Double tops. If price fails to break above the previous swing high, creates the same high or the lower high, and breaks the previous swing low, this is a potential signal for a reversal coming up, not a pullback, because pullback should end right at the previous swing low or higher than that, but not breaking it. What if price breaks it, closes below that, next candle breaks the low of the previous? That's your confirmation to enter. Okay, so this is going to be very famous neckline support. Next candle breaks the low of the previous, this is a reversal. Now, in this area, since you had a pullback, you will not see a lot of momentum. Once we have a closure below the previous swing low or the support, you will see a lot of momentum pushing price down because the trend has switched. We could not form a higher high previously, right? We formed the same highs or we formed a lower high. We form a lower high, we break the previous low to make a new lower low, right? So hopefully people are catching up here. These are hypothetical examples before I take you on the live market environment, which happened in the past, last week on gold, to help you understand the structure a little bit better. But these examples are good to do here because it is very simple to understand than looking at it on the live market environment. Okay. Once again, before we go on the live market environment, actually we're talking about reversals now. So let's, highlight that and remove this. Oh, removed everything. My bad. Let's remove this. Perfect. We're talking about reversals here. Okay. Once again, give you two examples. Bullish trend, price makes higher highs, higher lows, higher highs, higher lows. If price fails to break the previous high, creates double tops, instead breaks the low of the previous, it will create a lower low. Lower low, retest the previous support turning resistance, make a new lower low. Trend switches here. Okay, what switched the trend? Failure to make a new higher high and breaking the previous high right there. Instead, you break the previous low. This is a switch in a trend. Once the switch happens, you recognize this reversal pattern. This is going to be a reversal towards the downside. We will start making lower highs and lower lows. So that's the difference between the pullback and a reversal. Reversal, you can expect price to continue that way for a longer term. Pullbacks are short-lived. Short-lived, they will not continue forever. If you catch a good amount of profit, let's say 10 pips, 12 pips, secure it. If you wish to leave a small position running, you can leave it. But in terms of reversal, if you do happen to trade in a reversal, you can definitely keep on opening, not keep on opening, leave that position open for the longer term to potentially have a bigger profit here. Okay. Perfect. So hypothetical examples are done. So we can close this tab and take you to the live market environment right over here. This is 1 hour time frame, ladies and gentlemen, on gold, where gold has reversed completely reversed. Okay. Now, hopefully this is not too small for you. So what we can do based on the 4 hour or the 1 hour. Let's just stick with the 1 hour. Hopefully you guys can see it. If you guys can see this, try to watch it on a bigger screen. If you guys are watching on cell phone devices or iPad, now you have the feature of making this video full screen and zooming into it. So you might as well do that too. Perfect. Now, 4 hour, this is 1 hour time frame in gold. Looking at the examples here, ladies and gentlemen, this is the previous data here. If you look at this support right here, price was holding the support until we broke below it. Once we broke below it, reversal happened towards the downside. Okay, since then we made lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. Typical example of a bearish market trend on gold. Until what happened? Until price broke the previous high in a downtrend. So once again, you're making a lower highs and lower lows. What happened here is price broke above the previous high to make a higher high, higher low, and continue towards the upside. Now, where did this happen? This is happening right here. Okay, so what I'm gonna do, I'm gonna zoom in a little bit more so you guys can see it perfectly. Okay, so let's zoom in a little bit more right over here. Okay, awesome. So, as we all see, lower highs, lower lows, right? We all understand that. Lower highs, lower lows. We can also throw in a line there, right? Typical example of a structure that indicates a move towards the downside. What happened here that basically indicated a reversal is price over here breaking the high or the swing high of the previous. Breaks that swing high of the previous, creates a higher high. Okay. Once a higher high forms, you can expect the low to be higher as well than the previous. If this is the previous swing low and this is the next swing low, then this is a higher low. Once we create a new higher low and price goes towards the upside, and when it breaks that previous high, it makes a newer high. Okay. So this is an example of a reversal happening here. Now, let's take you to the recent market structure where I can also show you good examples of switches in trends. Okay. Now, right here. This is a very, very good example I can give you based on reversals. Now, once again, looking at previous examples, lower highs and lower lows, we all understand that. When price came back to the same area where we formed that low, we did try to break it. We broke a little bit of that low, but could not maintain the move towards the downside here. So think of these 2 points as same lows. If price could not break and close below the previous swing lows, then it could continue towards the upside. So this could be a potential reversal. But remember, it will not be a complete reversal until we break above the previous structures right here. So this was the key turnover for price. Okay, right over here, this is a resistance. Okay, it can still reject at resistance and continue selling off from here, and then maybe it can break the low and continue towards the downside, following that bearish trend in the market on gold. What happened recently is we kept a good eye on this area. Okay, if these are 2 double bottoms here and this is the neckline support, resistance here, then we need to break above this, make a new higher high, higher low to continue towards the upside. Now, this was done live and when we were trading on gold last week as well. I believe this happened on Wednesday when there was midterm elections in the US. Okay, so I'm gonna mention you just one area on gold right here. This is the area which was the key turnover for gold, 1673. Okay, we all understand we have pretty much double bottoms right here. So let's draw good highlighted double bottoms here. This is a resistance right over here, which price needs to break above to switch the trend. Okay, Once price broke above it, closed above it, as you can see right over here, all we have to do is break the previous high to continue trending with a lot of momentum. This is reversal. Now, in terms of hypothetical examples, what happened here? Let me draw some examples for you. Price is making lower highs, lower lows, lower highs and lower lows. What happens? It forms the same lows, right? It forms the same low. Eventually, it comes into a point where it will create a double bottom. This could be on a higher time frame, lower time frame, means the same. Okay, but remember, higher the time frame, stronger this confirmation is. Okay, so every time price is breaking the previous low, it's creating a new low. Every time it's breaking that previous low, it's creating a new low. This time it decided not to break the previous low, instead break above the previous high to make a newer high, and potentially you can expect price to create a higher support to continue back up too. So this is happening, my friend, right over here in this area. This is the previous swing high. If price breaks it, we will create a new one and we will create a higher support. As you can see, these are previous supports. This is a higher support. Once we break above the new high, we continue momentum with a lot of momentum towards the upside. This is a perfect example of that. Okay, so hopefully people are catching up here. Now let's go a little bit more further up. As you can see right over here, once again we form a new swing high at 1716. This candle breaks that swing high, we trend towards the upside. So this is a reversal taking place. Whenever you see reversals, it's not short-lived. It is of course long-lived for a very good amount of time because it is a reversal. Price was making lower highs and lower lows previously. As you can see right over here, bearish trend. We broke above a key resistance, created higher highs, higher support. Price broke above the new highs to make a new higher high. Breaks that high, continues towards the upside. Now, this is basically talking about reversals. What if you talk about pullbacks and why I don't recommend trading pullbacks for profitability purposes? Now, pullbacks, we all understand this is an uptrend taking place right from the support, right? We form a high and a higher support to break the previous high and make a new one. Now, we all see that the trend here is bullish. This trend is bullish, right? Straight shot towards the upside. Look at the pullback here. Pullback is short-lived. Also, it is not going anywhere. When the trend is so strong towards the upside, or could be towards the downside in some cases, whenever there is one trend dominant, the pullbacks are not that strong. So there's no reason to trade the pullbacks. Okay, let the pullbacks happen. Just simply wait for price to, break the previous swing high. So once again, in terms of hypothetical examples, what I will show you here is, let's say price is trending up, makes a high, you wait for a pullback, which is a support to form to break the previous high. Every time it's breaking a previous high, your job as a trader is to catch the process of forming a new high right here. Okay, if you did not catch that, you wait for price to pull back down, create support there to continue towards the upside. Now, let's just say you, for some reason, could not trade at that support forming. What you can wait for is for the new high to break. Okay, that high breaks, we will form a new one, right? Same example here. Price is making higher highs and higher lows. This is a trend up right over here. You see, price moved up, formed a high right here and a low right here. All we have to see is for price to break above this high. Once it breaks that high right there, it will create a new one, right? Look what happened. It created a new high. So would you rather trade in this pullback or would you rather trade with a actual trend? I'd rather have you trading here than taking a trade here. Now, I understand we're looking at 1 hour time frame. No one's going to scalp based on the 1 hour time frame. But what if this were to happen on a 5-minute time frame, 15-minute time frame, or even a 30-minute time frame? Would you still trade a pullback? In some cases, you should not be doing it. In 90% of the cases, you should not be doing it unless you are trading for a very long time. You know certain aspects of trading where you could trade pullbacks. Other than that, you should not be doing it. You should simply stick with the trend. If the trend is bullish, wait for price to break the previous high. In the process of creating a new one, you can take entries there and ride this entire move towards the upside. That's how profitability is made for the long term in trading. Okay, so hopefully this video helps you make better trading decisions in the market. Hopefully this video also helps you understand with more clarity the differences between the pullbacks and reversals. Ladies and gentlemen, thank you so much for supporting the channel. Thank you so much for helping me making this video for you. Okay, until next time, ladies and gentlemen, take care, trade safe. Let me know if there is anything that I missed out. Leave it in the comments, or if you have any other suggestions for me to make videos on like this, leave it in the comments. Like and subscribe to the channel as well. And until next time, ladies and gentlemen, take care. We will see you next time, same same place. Peace out.